Hi everyone and welcome to Infinox Market Insights with me, Richard Perry, analysing markets for Infinox on Monday the 10th of January. Now, markets are still settling down following on from this payrolls report that we had on Friday. The disappointing number meant that the dollar had a bout of selling pressure into the afternoon and into the close, and it's seemingly as though that markets are just settling down following on from that, whereby the dollar is just rebounding slightly because we've got treasury yields which continue to climb higher. The move on the 10-year Treasury yield to the highest level since January 2020 has helped to support the dollar this morning. However, what we are also seeing is a little bit of support coming back in for equity markets. Again, the selling pressure that we had throughout last week through Wall Street is just finding a little bit of support this morning, but is it sustainable? It's one of the questions that we're going to be asking through the charts that we're looking out for today. So the data points we've got today, there's not a great deal on the economic calendar. A little bit of Eurozone data in the morning, but nothing really into the afternoon for the US session. The focus as the week goes on will be turning to Jerome Powell for his his congressional testimony, but also the inflation data for the US as well. But today may be a little bit of a subdued session on that regard. So the charts we're looking out for today, I'm looking initially at euro-dollar because we had a jump on euro-dollar on Friday, but once more it seems as though that the range continues. I'm also looking at the gold price, which came under pressure back end of last week, but found a little bit of support. Interesting to see if that is the start of a renewed buying session. And also looking out for the NASDAQ 100 futures. NASDAQ has been under significant selling pressure, but it's started to find a little bit of support at a key level. And we're going to take a look at the outlook. So let's have a look at these charts. So onto the Infinox MT5 platform, and starting off with euro-dollar, we can see that euro-dollar has been in this trading range for a couple of months now. Not really managed to do a great deal in that range. It moves a little bit higher, a little bit lower. Spike higher on Friday on the back of that payrolls report, but starting to slip back again once more this morning. We've got the range that comes up resistance around about the 1360 area, maybe up to 1385. Seems as though that remains sort of sell zone territory at the moment. And what we do have is a very much of a neutralized momentum on that RSI, isn't it? Between 55 and 45, it's really neutral on euro-dollar at the moment. Looking at the 4-hour chart, I mean, taking a position on euro-dollar is really difficult for any sustainability of profits at the moment, but selling pressure seems to continue to come in around that 1360 mark. Initial support, you could argue, coming in mid-range, bit below mid-range, 1270 area, 1280. 1290, but essentially this is very neutral on euro-dollar still. Gold prices had been in this recovery phase, but then just fell throughout last week. Some fairly spiking moves, actually, fairly choppy to the downside, but losing the level of 1800 bucks just turned the market a little bit negative once more. You can see that RSI just dropping under 50. And it's picked up from 1780 on Friday, but what we do see essentially, I think, is just this little corrective, just drift really, and how the market responds at 1798, but 1800 bucks essentially to 1807 was the spike high that we saw also coming through on Thursday, but just essentially taking on a little bit more of a corrective look to this 4-hour chart as well. So just starting to see these moving averages rolling over as well on the 4-hour, and that would essentially again see a little shade of negative bias towards that 1780 mark, and as resistance comes in at 1800 bucks. And finishing off with the NASDAQ, you can see this uptrend channel. This is a chart channel that goes back many months actually, and it's come back to a really important level of support. These old breakout levels and the channel support coming in. If I zoom in here, the channel support comes in around that 15,500 area as support, and that's a really important support because breaking below that, you're looking at sort of lows dating back to October, so you're talking multi-month lows if that were to happen. So it's a really important phase of support, and if the market can hold on to this and break back above, you'd need to see the move back above 15,900 really, which was Thursday's reaction high. That would need to happen to start to see the market swinging back high. You can see here on the 4-hour chart that resistance coming in 15,900 area. So that's the level that you'd need to see NASDAQ moving back above to suggest that the bulls are back in control once more. But interestingly enough, we are still seeing this support holding, but this is a really, really important level of support here on NASDAQ. Thanks for watching this video. I hope you found it informative for your trading. I'll be back on Wednesday where we'll be discussing US inflation and Fed Chair Jay Powell. So I'll leave you with the Infinox support and resistance table, and I will speak to you then. Thank you very much.